Over the next 20 years, over $24 trillion is going to exchange hands in the form of farmland assets. I'm out here in northern Colorado looking at some farmland myself. Basically, over the next 20 years, you're going to be seeing a massive transfer of wealth, and some are calling it the greatest transfer of wealth in history.
A transfer in wealth, families inheriting the land and choosing to sell it because they no longer live on the farm. They've moved to the city. Average price per acre for farm real estate, $3,800. That's the highest on record in this nation, up 12.4% year over year, according.
While there are going to be a lot of older farmers that are going to be retiring, getting tired of getting out there, getting up early and doing the work, a lot of them also have kids that just don't want the assets. So I wanted to describe in this video to you some of the ways that you can purchase farmland assets, and it might be a little bit easier than actually going out and buying a chunk of land. So let's get into this. Farmland has outperformed all major assets, including commercial real estate, over the last 30 years. It's averaged about 11% total annual returns from 1992 to 2023. You can take a look at this chart here I'll throw up. It's showing a $1,000 investment in farmland compared to real estate, stocks, bonds, and gold. Pretty impressive as far as this kind of dirt, quite honestly. One of the other things that is happening is investors from institutions as well as private investors are looking at farmland to diversify their investment portfolio.
In Iowa, Illinois, above $8,000 an acre, interest expanding to the Pacific Northwest as well, and that's attracting new investors.
But what we're seeing is new buyers, new entrants into the market that have historically not been in the farmland asset class. And they're coming in with cash, pulling it out of equities and other places. And they're looking at this as an inflation hedge.
The Mormon Church, Bill Gates' family office, to private equity firms like Sixth Street Capital, they're among the investors buying the land, in most cases leasing it out to farmers.
So increasing scarcity, obviously, of farmland and a lack of correlation to other asset classes has made it a really exceptional investment, which is why a lot of these institutions are taking a look. So you can see this chart here shows the growth in institutional farm investing over the last 30 years. It's pretty impressive. Farmland funds are another way to invest. So in 2005, there were fewer than 20 farmland funds around the world. By 2023, that number reached 220 with $52 billion in assets under management. Pretty crazy. I wanted to share some fun farm facts from the Farmer's Almanac of 2025. 1.9 million farms and ranches are in the United States. 116,617 farms selling directly to consumers their crops, such as corn and tomatoes and whatnot. 296,000 producers are under the age of 35, which is interesting, very young crowd. 463 is the average acreage per farm. And then this one got me the most. Being out here in Colorado, actually lived in California for about the last 5 years. $486 is the average cost per acre to rent irrigated farmland in California. Compare that to Wyoming, it's $86.50. Wild stuff. So you might be asking yourself, how can I invest in farmland? So you can buy a farm directly. They're all over the place. You can actually look on sites like Zillow, landwatch.com, also word of mouth. If you know somebody that lives in a rural area and you're interested in buying a farm and becoming a farmer, a lot of those farmers would rather sell to you and a family than to a big corporation, even if the corporation's offering more money. So the average value per acre in the United States in 2023 for farmland was $4,080, according to the U.S. Department of Agriculture. You can also invest in farm REITs, real estate investment trusts. These are the closest an investor can get to owning the farmland without actually doing so. REITs including Farmland Partners, which is FPI is the ticker symbol. Gladstone Land Corp, which is Land, LAND, for their ticker symbol. Those are some other options.
There's two real estate investment trusts with exposure. That's Farmland Partners and Gladstone. You can see they've outperformed over the past 3 years.
Crowdfunding sites like Farm Together. They have an all-in-one platform which allows accredited investors to buy fractional ownership starting as low as $15,000. Now, accredited investors, you do need to have, I believe it's $1 million in net worth, excluding your primary residence. Also, you can qualify If you earn $200,000 as an individual, I think $300,000 as a married filing jointly, and you just have to be a high earner or prove that you have that net worth, excluding your primary residence. Then there's also farmland funds. These are funds that make it affordable to invest in land. They get a group of people together. They invest in the land. Farmtogether.com has a fund currently right now starting at $50,000 for accredited investors as well. Now, keep in mind, investing in these things can be done in your IRA. Did you know that? So a lot of people who use traditional IRAs or Roth IRAs, not traditional in the tax advantage portion, but traditional IRAs in the sense that you're investing those in stocks, bonds, maybe through a Schwab or one of the larger brokers. If you actually have a self-directed IRA or 401k, you have the ability to invest in farmland, whether you're purchasing that through one of these crowdfunding sites or farmland funds. You have the ability to self-direct and potentially earn more return on your money than investing in stocks, bonds, mutual funds, ETFs, those kind of things. One of the other things you could do is support the industries that support farmland. So this goes back to the concept of selling the shovel instead of actually digging. Back in the gold rush of 1849, the guy that made the most amount of money was actually the one selling the shovels and the picks to the people that are really interested in trying to find gold. So selling the shovel in this aspect could be supporting those industries that support the farmland. Fertilizer, seed companies, equipment companies like John Deere, distribution and processing companies like Archer Daniel Midland. Obviously, if you want to support in a roundabout way the farmland, you could do it through those companies as well. There's also ag ETFs such as VanEck, Agribusiness, MOO, like moo for cows. They try to get companies that derive at least 50% of their revenue from agriculture. So I think the long end and the short end of this is farmland is an amazing opportunity to diversify your investments. It's also it's really peaceful. I'll tell you what, I lived in California for the last 5 years. I wanted to take advantage of living in Southern California by the beach, but I'll tell you what, it's awesome being back home. I'm up here in northern Colorado, like I mentioned, and just having dirt surround me and some wind and seeing some beautiful trees as a moth flies into my truck right now. So if that's something you want to do and you want to get into farmland, take a look at some of those opportunities. Maybe purchase some chunk of land for yourself. My family has over 36 acres here up in northern Colorado, and excited to see what we can do with that. If you want to learn more about investing, I'll leave some of the links down below as far as to the resources that I mentioned. And yeah, appreciate stopping by and listening. Let me know if this is something that interested you. Hit subscribe and let me know if you're interested in investing in farmland.